Welcome to the Farming Without the Bank podcast, the show with a no BS approach to money, hosted by a farm strategy expert and authorized IBC practitioner. Join us as we get real and expose the flaws of traditional financial institutions in order to help farmers take control of their finances, create peace of mind, grow their wealth, and leave a legacy. Now, here's your host, Mary Jo Irmen.
Hello, and welcome back to the podcast. Thank you very much for being here. Today, we're going to talk about taxes, but before I do that, I am going to tell you a couple of things. One, we are having our client-only conference. So if you are a client, go to your email. You got invited to the conference. You got texted an invite. You got emailed an invite. There's an invite in the client-only Facebook group. If you can come, please come. We added new speakers, the Carwells. We're going to talk about short-term rentals. We're going to talk about farming. We're going to talk about ranching. We're going to talk about all things IBC, estate planning. It's going to be amazing. And then we also added a hotline. And so if you guys listening have a burning question for me, all you have to do is go to themjhotline.com. themjhotline.com. And you will be able to just hit record, and you will be able to record a message to me, and I will listen to it, and I may use it as a question on the podcast, and then I will answer said question for you. So go to themjhotline.com and you can get that there. If it's not working at the time that this is released, it's because we're still working on it and I'm jumping the gun as usual. All right, today let's talk about taxes. I was running some numbers for some people the other day, and they also did not know how taxes worked until they said that they watched my previous podcast where I was talking about tax tiers. And so I'm going to bring that up again today because it is timely with everybody trying to avoid taxes and buying things to avoid taxes. So we're going to go through this together. If you are not watching on YouTube, you are probably going to want to watch on YouTube because I am going to share my screen and I want you guys to be able to see that. Let me get my screen all set up here. As you can see, we have this is a normal tax chart, okay? So I've got $200,000 in here as income. That means that if you make $200,000 and you do not have any deductions, that you would pay $34,800 in taxes. You have $22,000 at 10%, $67,450 at 12%, $101,300 at 22%, and $92,50 at 24%. The higher that goes, the more the taxes. So let's just say we make $500,000 a year with no deductions. Well, we're going to be at $173,000 at 24%, $98,000 at 32%, and $37,500 at 35%. Okay? So the more that comes off the top. So if you're going to spend money, it's going to come from the top and go lower. So let's just go back to 200,000 because that is where I have my numbers figured. So let's say that you have $100,000 in expenses because you're a business owner, you're a farmer, and we have a lot of expenses. So now what that means is that our taxes were $34,800. Now we have $100,000 in taxes or in expenses. It went from 34 to 12,615. Okay. That is our new taxes that reduced our taxes by 22,185. You can see that down in the middle. So we spent $100,000 to save 22,000. Now, I was recently doing a presentation and there were two bankers in the room. The one banker that I was kind of watching one banker because he was over on the side, kind of, he had some shit to say, but he thought he knew everything. And I'm not saying that I know everything, but I was using this example and he was telling me that that was wrong and that, no, you don't need to spend that much money to save that much. Yes, my friend, my new friend, you do have to spend that much money to save that little amount. And so in this example, we spent $100,000 to save $22,000. Like, really? So we saved $78,000? Really? Do we want to keep the 78,000? I mean, I'm just asking. I'm just asking for a friend. So when we look at this and it makes sense because we can see the picture of it. When we spent 100, we saved 24% on 9250. Then we saved 22% on 9750. It's not a dollar for dollar exchange. Then we still have 10,000 in the 22% tax bracket. So what I did was said, okay, what happens if we spend another $11,000? Because we're in the 22% tax bracket, right? So if we spend another $11,000, that reduced our taxes to $24,560. Well, that means we saved another $23.75. We had to spend 11 to save $23.75. But now all of our money now is being taxed at 10 and 12% because we reduced it out of the 24 and 22. So now we have everything going forward, we're going to save 12% on. So what happens with the next 11,000? Let's just say we spend another $11,000. Well, now our taxes went down to 25, or our savings, went down to 25,880. So that means we saved $1,320. We spent 11 to save $1,320, $1,320. The 11 before that saved us $23.75. So when we get down to the 12 and 10% tax bracket, we're spending money to save 12% of that. If we get down to the 10% tax bracket, we're saving money to save 10% of that. So then the question becomes, is a 12% sale enough? And I say this all the time, right? All the time. Drive past John Deere. John Deere and Case IH have these big signs out front, 10% off, 12% off. Are you going to stop? You're probably not going to. You're probably going to say, well, that's not enough. I want to save more money than that. Okay, but that's what you're doing at tax time. You're actually going to John Deere because you act like they're having a big sale. Or you're going to Case IH because they're having a big sale. Or we need to buy those bins because we're having a big sale. So if we're going to spend $100,000 to save 22, would have we just been better off to pay the 22 if we didn't need anything? Now, keep in mind, this is if we don't need stuff. If you're pre-buying fertilizer, chemicals, seed, great, fantastic. You're going to need it anyway. But if we don't need to upgrade that combine, if we don't need a new tractor, are we really saving something? Now, I get it. I have bought things too that I was like, oh, I can depreciate that all in 1 year, and that's fantastic. But we go out and we upgrade this to this new vehicle. If we get stuck with a payment on it, if we went and borrowed money to make that payment, what does that look like? What are we paying in interest, right? We have to look at that we maybe didn't pay the government $22,000, but if we had to go buy a $100,000 piece of equipment, then what does that interest to the bank look like? Because we borrowed the money to do that. If we had the cash to do it, again, a little bit different scenario. But even with the cash, if we didn't need the piece of equipment, we just gave up $78,000 that maybe could have been used for operating. With operating notes at 9 to 10%, it may have been smarter to just use it for operating. Don't be using it to pay down land notes unless they're extremely high interest rates. Why are we paying down land notes right now? The main purpose of this was to show you that, yeah, we're going to save a little bit of money if we're in those higher tax brackets right away. But the more we spend and the more we buy down to that 10 and 12% tax bracket, we have to spend a lot to save a lot. Is it worthwhile to do that? When I show people these numbers, they're like, what? I have to spend that much to save? Well, yeah, because it's only 10% or it's only 12%. I mean, if I see a sale in town at 12%, I'm like, that's a joke, right? Like, you're going to mark that off 12%. That's not enough for me to bother. But yet we do it all the time at the end of the year. Something to think about is, if we're going to borrow the money, what are we paying on interest on that same money? And we can figure that out here too, right? I can go in and just get a very simple payment calculator. Well, let's get this calculator. I'm going to do this as I'm talking to you. Let me share my screen again. Okay, so let's say that we are buying a piece of equipment and they're going to finance it over 7 years. And it's a $100,000 piece of equipment. We have a 7% rate on it, and it is 7 years. So now we pay $18,555 a year, and we've paid interest of $29,000. $29,000, and we saved $22,000 on our taxes. So we actually, in this scenario, we actually paid more in interest to the bank than we would have paid to the IRS in taxes. So what do we want to do, right? Do we want to go to the bank and borrow money for that? What do we want to do? My thing is run your numbers. Understand what we're doing when we're buying things to avoid taxes. Because in that scenario, what did we do? We just inherited an $18,000 payment every year that we maybe can or can't afford. And so look at what you're doing. But I just wanted to touch again on all of this. Talk to your accountant. I am not an accountant. Talk to your accountant. Have him explain this. If I'm explaining it wrong, then by all means, I would love for an accountant to explain that. And I've talked to accountants about this, and they agree with me. And so for a banker to not agree with me and to poo-poo this idea, was it just because he was scared he wasn't going to get any loans and I was talking people out of buying stuff to avoid taxes? I mean, come on. Ultimately, the bank would love to have all those loans, right? So let's make sure that we are running numbers and thinking that purchase through. Because you've heard me say, I believe there's going to be another 80s farm crisis if we continue to do what we're doing. And in fact, there could be another 80s business crisis. Don't tell me that businesses did not go out of business in the 80s because they were financed to the hilt. Of course they did. We just didn't hear about it like we do in the farming sector. And so be smart with what we're using our money for. If that piece of equipment is being used for custom work and they are paying for your interest, then fantastic. But if that is your operation needs to eat that interest and needs to figure, do I want the cash? Do I want to buy this or not? Okay, can that piece of equipment create cash flow to pay for itself? Things that need to be looked at. The big picture. All right. If you guys have comments, questions, concerns, let me know. If I have ticked you off and I'm wrong, let me know. I mean, you guys, there's going to be obvious scenarios when you're going to want to buy things. Obviously, I'm not saying don't go buy things. When I do these podcasts, everybody thinks, oh my God, you're telling me never to get a new piece of equipment. Oh, on the contrary, I think new pieces of equipment are important. It makes you more efficient, less downtime. All those things need to be considered. I'm not an idiot. However, so many people are just nonchalantly going out there and doing this, and they're not looking at the fact that they actually just redirected money from the IRS to the bank. It really comes down to who do you hate less. So that time of year, happy tax season, happy tax planning. But let me know if you have comments, questions, concerns. Otherwise, get registered for the summit. If you are a client, grab your book. If you are not, get on my calendar. I am booking out until February. I apologize. I have a client conference, so that takes me out for a week. I have a speaking engagement that takes me out for a week. Please wait for me or book your appointment with John. When you go to the link, there is an option, Mary Jo or John. If you cannot get in with me, book with John. He was trained by me. He knows what he's doing. You are in good hands. Okay, let me know what you need. Have a fantastic rest of your day.
Thanks for listening to the Farming Without the Bank podcast. We hope today's episode has inspired you to take control of your finances in new ways. Don't forget to check out our website, farmingwithoutthebank.com, and engage with us on our Facebook page, Farming Without the Bank. Join us next week as we smash more financial myths and empower you to accomplish your financial goals.